Hello all. So the question we're going to respond to here is whether NIO, the well-known EV company, is worth a revisit after it has dropped massively in the last year, basically. So the company used to have its stock priced at 65, around this level over here, but now it has dropped more than 50%, almost 60% really, and it's down to $25.51. It did gain 17% in the last trading session, so we could have gotten it at an even cheaper price. But the thing is, we want to examine whether it makes sense to actually add this to our portfolio. Now, the thing is also that EVs currently are very, very trendy, and that happened mainly because of Tesla. Tesla seems to be doing well and keeps on doing well. And even though there has been a recent downturn really in the stock market and the price of all these EV companies, we still need to examine them in case they make for interesting buys now that the market seems to be kind of balancing itself out a little bit and going back to normal. So what's going on with NIO here? The first things that we need to examine here is the outstanding shares, obviously. We want to take a look and see whether the company is diluting shareholders. In fact, they do. Look at this. Company used to have about $1 billion in shares. And when actually people wanted to buy more of it and the price went up, this is when they actually offloaded more of their stock. And they massively raised their float here and their outstanding shares count to 1.6 billion. That's a 60% raise in less than 2 years. So that's massive and really, really bad for investors who get massively diluted here. And they're backing on the trend, I guess, and that makes a lot of sense for the company, but it's bad for investors. You will see here that they delivered 9,652 vehicles in January 2022, up by 33.6%, which is nice. It's very good, actually. And another interesting thing that we will examine is actually how their cars look like, because I was taking a look at how their cars are designed and how they look like, and I love them. And I'm one of those people that are purchasing cars based on how they look, really, and utility comes second for me. And even though I'm pretty sure they're pretty nice cars overall, they look awesome. So I liked what I was seeing there. So in terms of the dividend, the company is not paying any dividends here. You see, there is nothing to report. But we will see the income statement here of the company. And as usual, we take it down to about 5 years, which I think is more than fair for evaluating growth of the company. But look at this. The current growth is amazing. Like the revenues of the company are massively increasing over here. And the year-over-year growth of the gross profit is also massively increasing. And however, the operating income here is in the negative. And what about the net income? Also in the negative, 1.1, 3.3, 1.6. Losing a lot of money over here. So the company is losing a lot, which means that they won't have a PE. It's going to be negative. And I'm assuming that the free cash flow will also be negative, of course. So take a look at the balance sheet here. And the thing that I want to check immediately is the total equity, which seems to be going up. However, I'm assuming that this has a lot to do with additional paid-in capital because they sold a lot of stock. So they're financing operations not through what money they're making as a company, but what the investors are willing to give to them by purchasing stock. This is why they increased their stock massively. And they did get some debt as well. So that's a company that requires massive capital. All sorts of car companies do. And this is a little bit worrying for a company that gets a lot of debt and dilutes shareholders. Not great to see. However, they have potential high growth for the future, so to show for. So that's an interesting thing for potential investors here. Cash from operations used to be in the negative, now it's positive, so that's a good thing to see. And actually, very, very positive after a while. Went up immensely here. That's good to see, very good. A little bit of investing, for the most part, investment in market securities. Okay, so that's another interesting thing. They're buying some stocks and stuff. Total debt, a little bit of debt here, as I'm getting messages on my phone. The phone always knows the best time, right? So issuance of common stock, what we examined earlier, 5.3 billion, 3.1 billion, and cash flow financing is going to be positive. A lot of debt over here and a lot of sold stock from the company. Free cash flow in the negative as expected. It was positive here, but generally speaking, in the negative, the company is not really making money. So the multiples here are gonna be relatively high. Not too high though. I would expect them to be higher really. Probably means that they have good sales. That's good to see. And ideally, we want as low as possible, obviously, but 1 to 3 is probably best. The enterprise value of the company is very similar to the market cap, but the profitability over here is going to be negative because the company is not profitable. But the solvency here, you will see that the company starts incurring quite some debt over here, and from 30% jumped up to 70 almost. So that's quite a lot here. So yeah, this is what's going on with this one. The very interesting thing, the company has $39 billion of a market cap, but it's not making any money. And let's take a look at the projections as well quickly. And we can also see it over here, what the projections are for next year. And so you're expecting to have an increase in sales. Yeah, I'm okay with that. I expect that too. What about the EPS? Yeah, the EPS is projected to grow actually substantially in the next couple of years. So that's definitely not very conservative at all. So analysts think that in 2023 the company will post an EPS of 0.24 from being negative right now. So that's very interesting. And right now, obviously, the company is expensive, very expensive compared to what they are making, because you cannot really know what's going to happen in the future, and you shouldn't be looking to pay too much for the present value of a company just because it could potentially at some point be worth more, because you can be really burnt in the near future or in the near present, really. And what would I do here? Now, this is a little bit weird because obviously when the company was at these levels, I wouldn't touch it at all. 40s, 30s, I wouldn't touch the company. If the company goes a little bit below 20, maybe a mid or low teens maybe, I think that's a potentially very, very interesting opportunity. So it will have to drop for sure for me to get into it, because I don't like the current valuation for my, for my investment here. I like the company though. I like the company, but I'm not sure about the valuation. And let's take a quick look at the cars as well, by the way. Yeah, you will notice here some very neat cars. Cars are looking fantastic over here. I love the way these look. Look at this one. So yeah, the cars are looking dope, really. But yeah, going back at the stock price here and the current financials, as I mentioned, I would want to get it maybe around here, like here, maybe 14 at this level, for instance, would be interesting to purchase. Just because I want to get a much better value, because the company is still a bet and I don't know how well they're going to be doing, because projections are not necessarily going to be happening. They tend to be kind of optimistic for the most part, if not very optimistic from most analysts. So yeah, right now I like the company and I like the car. I don't like the stock price. It's still expensive for me. So if at some point it goes lower, I would actually potentially think of adding this to my portfolio. It looks very, very interesting and can potentially give me some good return. But I do want to get it for a lower price when the hype dies down a little bit, maybe. Because when the hype is up, everything is overpriced. I just don't want to get in right now. But let me know, what do you think about NIO? And if you have it, if you have bought it, and if you are thinking of buying it, leave a comment below. Let me know. Do you think it's a good opportunity right now? Is it expensive? Is it cheap? What do you think? And I hope you enjoyed the video. And I'd love to see you in our Discord channel. You can find the link in the description box below in this video. And it was awesome to talk about NIO, a very interesting company. And in the meantime, you can take a look at this video that I made earlier about Salesforce. And I'll see you in the next video. Bye bye.